Hi, this is Sive Morten with the daily update on EUR/FX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the euro currency. So on Friday we saw some bullish type of action in the euro currency, and we discussed it in the weekend. So it's become clear later that it was some liquidation of the bearish positions against the euro currency and some other currencies, in particular Australian dollar and the New Zealand dollar, by the hedge funds. That has provided some support, and we actually were wondering whether this effect of this position liquidation will be long-lasting, or this will be just for a short term. So on recent type action, we haven't got any actually evidence on whether the market will proceed higher here or this will be some different action, because on the daily chart you could see that Monday was inside session and market wasn't able to climb higher and to reach at least the nearest standing resistance area. In general, we have agreed, if you remember in the weekly report, to get some confirmation from the euro currency of its bullish ambitions. To prove it, market has to form some clear bullish reversal pattern. And until it will be formed, it will be a bit risky to make a bet on the upward continuation. Because despite this breakout of the wedge pattern that we discussed recently, overall tendency is bearish. So you can see lower lows and lower highs. So market hasn't formed any bullish reversals. And with this type of action, it means that at any moment, market could proceed lower, because overall background still stands bearish, and we treat any upward action here is just a pullback that we intend to use for a short entry. But for us it is important how strong this pullback will be to determine the levels where we could consider taking the short position. So it depends on the patterns. So if we will get some patterns, maybe we will start to consider 20 even, it's 1999 area, circumference resistance, or in a larger scale bullish pattern, for instance, that we also mentioned, if you remember, potentially here, this might be the head and shoulders, right? Market return right back up to the 120. This could form the larger pattern. In this case, we'll start to consider 21 area, the some ABCD pattern. But all of them still will be the retracement. Alternatively, inability of the market to form anything valuable around this area means that we should get downside continuation, because OP stands 1621, sell-off very strong here, and this looks as a preferable scenario currently. This market should reach it. So we keep watching what was going on intraday charts, what market could form here. On the 4 time frame chart, take a look what we have. It's very choppy performance recently. Market has formed minor grabber pattern here. It suggests the taking out of these lows somewhere around 1835, and it could be some downside drop here. So, but in general, taking in consideration whole performance here, we have the bullish divergence here with these lows. That suggests taking out of this top, and since market still stands in a tight consolidation, it keeps chance to proceed higher, maybe to 119 area. But currently, as you can see, grabbers working and market standing lower. Since on the hourly chart, we haven't got the OP target that we have specified. So if you remember, in a weekly report where we were talking about this ABC bottom pattern, that was our crucial lows for the bullish context last week on Friday. We said you could try to take the long position while market stands above it. You can see our prediction has started here, was garden cheaper to buy, if you remember. And in a weekend, we said, let's keep watching for the OP. It's 1909. It creates agreement resistance. And if market will climb there, it will be simultaneously bullish reversal swing and potentially might become the reverse head and shoulders pattern. That will be the pattern that we would like to get when we talk about the reversal. So market, as I said earlier, has to form some bullish pattern to prove us that the bullish conditions are strong and indeed market is ready to go higher. And that's what we particularly are watching for. But currently, take a look what we've got yesterday. Instead of the action to the OP, we've got just a COP minor extension, retracement here, and market now stands in some consolidation. As a bullish scenario here, we could suggest forming, for example, the butterfly, although one detail here is that grabber that we have here contradicts the idea of the butterfly, because grabber suggests taking out of these lows. Well, maybe if it will not be the butterfly, it might be cartridge triple to buy, right? So it may be something like that. And in this case, we will have here's ABCD retracement, completion of the grabber, and around 1830, this might be point where theoretical market could start upward action. If it will form, here's cartridge triple to buy. This is alternative scenario to the butterfly that we have. If market still will not be able to break these lows and stand above it, potentially butterfly might be formed. And take a look, the extension of the butterfly coincides with the OP target. Stands at the same 1909, 1908 area. So that's the scenario that we'll consider. Invalidation point of all this stuff, as it previously, stands around C point below 1820. Because in this case, if market will not be able to proceed higher, turn early to the downside, drop below this area, simultaneously erase the ABCD pattern here, and it will be, well, additional point in favor of downward breakout. Break below 1783, it just will erase all the picture here. It just will be downside continuation on the daily chart. That's why here this level is very important. So if you plan to take any long positions here, you could consider two patterns: either butterfly here with the stops below this area, or cartridge triple to sell with the 1830 potential lows. But currently, since we have the grabber, it will be better anyway to place stop below this area, because whatever you pattern will choose, whether the butterfly or triple two, invalidation point will be the same. Besides forming of the ABCD retracement down, here is forming triple two pattern will erase butterfly, but it will not erase totally the chances to go higher. From that standpoint, it's also looks more reasonable to place initial stops below this area, whatever patterns you will intend to trade. So that's currently what we have on the euro account. So let's keep watching what will happen. Our major target here is to get the pattern. So this is just minor tactical detail on the way how market could climb back to the 190 area. This is just a minor nuance. It's part of the overall strategy. But what we really need, we need this pattern. So when the market will hit it, we'll start watching for a deep retracement to get the bottom on the right arm. As potential will be attractive for taking the long position as it did. Market could proceed higher to the 120 area, and this is the pattern that we intend to use. That's our scenario for euro currency.